So that was the bounce that I was looking for. We had a major, about like 250 point bounce to the upside from lows from that previous Friday. So if you remember from the last video, I was looking for a very large move. There was an opportunity for bulls around this range, around 4,200 mid that I referenced in a previous video. Since that was unable to hold, remember we would have that capitulation, that final capitulation leg, which ended up happening here, and it was followed by an even larger rally than I was expecting. Honestly, the fact that we're all the way back into the mid 4,300s is pretty absurd. If you look here on the daily chart, just because I was on the hourly there, you can see we were able to close not only this daily candle, but also the weekly candle of last week above this blue trend line. Remember what this blue trend line is. This is the one that goes all the way down to that October of 2022 low. It connects to the March low for the previous correction of this year in 2023. And you can see now we are back above that. And not only that, if you go to the weekly chart, just keep going through the candle durations here, you can see this completely invalidated the last 5 weeks of trading for closes. We closed above the last 5 weeks of trading. That is insanely bullish. The fact that we were able to close up here, it doesn't negate the fact that we could see maybe a minor pullback from here. However, this is a very, very bullish candle. This is also a complete reversal from the previous trend that we saw over here, and also a key retest of the previous breakout level. This is, remember from the last video, this is what I was looking for, at least to see a bounce off of. The fact that we bounced off this retest, especially as hard as we did, is super, super bullish and should lead to continuation from here into the end of the year. So again, if we do have minor retracements from here in the form of a pullback, I believe those are buy the dip opportunities. But considering, if you go back to the daily chart, considering how strong this move has been so far, it is very clear the market does not want to let many people on board. So the best time to buy was down around here, where I was actively telling you guys to accumulate after we did break down from this 4,200 mid. It's all a risk game, honestly. The fact we didn't bounce around 4,250 means you can mitigate your risk to about 40, maybe 50 points max. Cut that position, wait for it to capitulate. Over here it capitulated, and then we saw that huge upside move, if you remember that previous video that I was talking about. So I really like what I see so far, and something else that I really like to see is QQQ right now. This was a fake breakdown pattern. You guys know, if you watch this channel, that fake breakouts and fake breakdowns are super strong when they go in the opposing direction. In this case, we had a fake breakdown, so the opposing direction would be up. The fact we had a fake breakdown means that this would be very strong in the opposite direction, which we of course saw over here, a straight shot up from mid 340s all the way to the high 360s, and it doesn't look like it's done yet. Yes, we are at the top of my trend line here. However, I'm looking for this week to see some form of a curl setup if the market even wants to allow it. You can trade QQQ off this setup. Basically what I mean by curl is some form of a minor pullback to around 360 being the lower end, probably is going to be around 362 to 363. So a minor pullback there, and then shoot up straight out of it. So it acts basically, if I show you in drawing over here, you can see basically what we'd have happen for a curl setup to occur would be somewhere around this range. You see price pull back this week and then shoot straight out like a cannon, basically, which would be a clean breakout of this macro cup and handle pattern. Remember, we have to talk about macros here too. This is super bullish, like I showed you with the S&P 500. The fact that we invalidated the last couple of weeks of candle closes, that alone is bullish. And also the macro in terms of technicals is super, super bullish as well. This is a macro cup and handle pattern. And this, technically speaking, warrants upside all the way up to around where we topped out at all-time highs previously. I would not be surprised to see high 390s off of this breakout. So that's why I am looking to trade this. I didn't add QQQ exposure. I only have SPX at the moment. No complaining there, since that was an insane move. However, I am looking to add some QQQ exposure in the form of longer term calls, because if it does break out of this pattern like I am expecting it to, this is going to continue to pump to the upside in an aggressive fashion. So I will be looking for this curl setup if it permits. Also, there's the possibility, even though we are super overbought at the moment, there's a possibility we see a gap up above this level, and it just is a gap up and go and has continuation. So again, that would be a little bit more of a chasing. You'd want to base it more so on pivot levels intraday. However, it's always best to let the trade setup come to you. In this case, the curl setup, something that I'm looking for. And speaking of large moves, we saw another large move in the form of the VIX, except this one was in the inverse direction. You can see here a major breakdown on the daily, exactly what I wanted to see here, big suppression of vol, and it should continue throughout the rest of the year here. So about 2 more months of vol suppression, just absolutely hammered to the downside during that rally. We're back below that key 1760 to 18 range. This is the range that basically, as long as we're below, it is risk on in the market. So we are below it by a lot now on the VIX. So this is a great risk on signal as long as we stay below, like I said before. And also something else that's super bullish too, if you go over here to the dark pool levels, I've been talking about a lot of dark pool accumulation that I've been seeing for the past couple weeks now, even back all the way till end of September time period. But the fact that we've still seen a lot of this as we've gone up, we saw 1.9 billion at 434. We saw 3.1 billion at 430, along with 1.1 billion at 430.68. So these are basically right at that same level. You're looking at over 4 billion in premium at this 430 level. So that's another large print to see. And as we go down, there's a little bit smaller ones like 1.8 billion here, 1.6 billion, et cetera, et cetera. But again, this is only from last week. If you look back at previous weeks, we saw a ton around 425. It was over 5 billion in premium around 425. I was talking about it being accumulation. We went below that print, but again, it doesn't have to be exact timing when you're talking about dark pool prints. Again, if I go to just XPX's chart here, even if we did have that breakdown around 425, which is roughly around where this area is here, there's still that potential for quick capitulation, and then it can bounce back up. And again, in this case, we invalidated 5 weeks basically of selling. So there's a very strong base in terms of dark pool accumulation all around this range. I know I'm on SPX here, but basically between 4,150 all the way up to around your 4,300 level, there's a lot of accumulation. So as long as we remain above this range, which is my expectation here for continuation higher, again, there can be short-term pullbacks, especially because of how overbought we are at the moment. However, I do expect continuation. And like I've been saying before, my target is still 4,700 plus into February of 2024, which may not seem as crazy to you guys now as it may have seemed all the way back around 4,200 and even in the 4,100s. Regardless, I am looking at other setups too. One more that I'll share with you here is on Tesla, a potential setup at least we do have. If you look at the daily chart here, we're in the golden pocket in terms of Fibonacci. So this green range over here, we had a bounce off the golden pocket that is bullish. The fact that we had a bounce off of this and we did have a gap up, which shows that there is a little bit of momentum for that trend to the upside. And it did have some weakness end of day on Friday. So what I'd like to see this week, if I go to the hourly chart here, is a potential inverse head and shoulders setup. I really like these inverse head and shoulders setups, especially when the market is bullish and trending to the upside. So we do have a pullback. First pullback would be around 214, 213. Second one, this is the ideal one in terms of risk reward, would be around 205 to 207. If we can hit that, this is looking like a very nice inverse head and shoulders pattern, and I can see upside all the way back up to around 240 to actually fill this gap from over here from earnings. So I'll be looking for my criteria to be met on this setup this week. And regardless of that, a very eventful previous week in the market. Is rare to see over 250 points in a single week to the upside. So I'm glad to see the thesis playing out. We'd like to see continuation from here, of course, with some pullbacks if it chooses to do so. And other than that, I will see you guys next time.